Welcome everyone to another week and another exciting episode of the None of Our Businesses YouTube show and podcast, where accountants talk about this week in business news, some of it accounting, some of it not accounting, but we all have opinions on it. So with me, as always now, Charlie Ziegman.
Hey everybody.
Mark Pilardi.
Hey.
And AJ Wheeler.
How's it going?
All right, guys, good to see you here. Good to have you again. And I think we're going to get right in. Charlie's going to start us off.
All right. So, we'll start off on kind of the accounting side, but I'll try to keep it light. We've got an article in Reuters called U.S. says AIG settles tax shelter lawsuit, forgoes over $400 million in tax credits. And so what's happened is that there has been there was overwhelming evidence that AIG used a couple of transactions back in 1997 to basically ensure that they were going to get tax credits, and they were illegitimate transactions. And this was later noticed and found out. And so there's been a case ongoing about it, and they've reached kind of a settlement on it. And they've been given basically a 10% penalty for trying. And then the U.S. has basically taken away all of those credits that they claimed. And so from my perspective, it was really interesting because it seemed that the penalty that was given in relation to how much was on the line and in relation to kind of what was happening in the case seemed like very small. And so I guess I wanted to talk about whether or not a 10% penalty is reasonable in a case where basically they're, just willing to fraudulently make transactions that enable them to have a smaller tax liability. And it's like, why would a company even bother trying to obey the law if the penalties for not doing it are such a small slap on the wrist that they would have been better off to at least try? And so I want to get you guys' take on that and whether you think that, penalties are proportionate to the crime.
Yeah, I thought the same thing when I saw the article about the fact that, with only a 10% penalty, because usually like the negligence or the substantial understatement penalties are at least 20%. So for them to basically settle, as they said in the case, on only a 10% penalty, I thought that was interesting. And I thought the same thing. It's like, oh, well, I guess you're just encouraging companies to give it a shot, right? Go for it and see what you can get. I think there you can say that in one hand, but on the other hand, I think it's important for the audience to understand that it's not quite that simple, in the sense that in order to get to the 10% penalty, they probably incurred all kinds of accounting and legal fees to basically battle the IRS on this issue for a while. And there was some kind of line in there from an AIG person who said, we're happy to finally put this behind us, which reminds me, in my corporate tax days working with really big companies, that wasn't uncommon that you might have some kind of tax shelter or tax issue that the company has a protracted battle for years on with the IRS. And so, I don't know if that was the case here or not, but that statement kind of brought back those memories of that could have been the issue. And I would say there's another dynamic when you're a large public company and you're reporting to shareholders. You have this issue of kind of the unstated liability or the unknown liability for these kind of tax issues that you're constantly having to track, manage, and deal with. And so I'd say that while the IRS and the government on the surface doesn't really seem to be providing much disincentive for just trying whatever, as we said, I think when we think about that, we have to put it in the context of that kind of taking aggressive tax positions when you're a large public company. There is a lot to it, in the sense of from a having to account for it and track it as a unknown tax liability for your financial statement purposes and to meet SEC requirements, to the having to battle the IRS potentially for years with lawyers and accountants. So it's not exactly the case that all they do is pay the back taxes and just their 10%. There's a lot of other costs associated with what they did there. That being said, even if you take all those other costs into account, you have to wonder if decision makers really still, if in its totality, if this motivates decision makers to not do these things or not, or whether they still look at it and say, okay, 10% penalty from the IRS, legal costs, accounting costs, and administrative burden of accounting for complicated unknown liabilities for years, yeah, it's still worth it to roll the dice because it's not my money and maybe we can get away with it in the final end. And then when we do get away with it, there's extra cash for my bonus, right? So maybe that's, it's hard to say where that equilibrium actually lies for these folks.
Yeah, and when I read this, it kind of reminded me of our conversation last week about Wells Fargo and some of these tone at the top bad actors. Not that everybody at the company is a bad actor, but AIG is a name that's really familiar to some of us as, and I just looked it up on Wikipedia. In 2008, the federal government bailed them out to the tune of $180 million. So here we are kind of giving money. And then in 2009 is when they went and protested against these penalty claims that are in this current article. So there kind of seems to be a trend that, some of the corporate culture speaks to this kind of playing fast and loose with the rules.
When I think in absence of like a good tone from the top, I think focusing in on what Charlie was talking about the penalty itself being enough. I think there's a good way to look at it. I think the penalty needs to be large enough to incentivize not breaking the rules, I think. And I think 10% seems low to me, even factoring in what Ty said about the cost and, all the reporting and monitoring of this, tax battle that Mark pointed out was started in 2009. So you're talking 11 years or whatever it is. So I think, probably 10% seems too low, and I think maybe more, I guess, leeway for tax penalties in a case like this would be warranted, I think. But I think that's all up to a tax court at some point to make that choice, or for legislator.
Yeah, that makes sense. That's very true. All right. So AJ, do you have another article we can talk about?
For sure. So this one comes in from the San Francisco Gate. So Reddit, the popular online like news and aggregation user content stuff, announced permanent work from home and eliminates cost of living pay compensation. So they followed suit with like Twitter and Dropbox and Google saying that they have an option for their employees to switch to permanent remote work. But the thing is they're doing away with any kind of cost of living adjustments for salaries. So if you live in San Francisco, you'll make the same as somebody working remotely from Kansas or anywhere else in the country that has lower cost of living. So I think we've seen a shift this way, but I'm wondering if this is going to accelerate kind of the exodus that we've talked about in the past from large cities. And we've talked about it before, but I'd like to get your guys' take on it.
Yeah, I mean, I think we're seeing this kind of as a tip of the iceberg with some tech companies. And I think that definitely could flag a trend that's coming down the line. I think we're probably a ways off, because as we move, at least from an accounting industry, to a more paperless world and a more online presence, it seems that tech companies are going to be at the leading edge of this. I think the exodus away from cities and into more low-cost areas is definitely something that will start to affect all sorts of facets of the marketplace as technology gets better and people can do this more and more. I applaud Reddit for recognizing people for their skills and not necessarily where they live in order for salary payments.
Yeah, and I think it's really interesting because, like, as a company, if you're going to implement this kind of policy on people, it's like, other companies in that industry wouldn't maybe hold you to that same rule. So basically, Reddit might say, okay, we're going to pay you at the rate you got in San Francisco, but another company might not. And so it just seems like if somebody's living in Kansas and their company says we're not going to pay you according to that anymore, that doesn't really stop them from then being able to go look for somebody for a position in San Francisco or whatever. And so, yeah, it seems like until all the employers are kind of on board with the same approach, that it's going to be up to each person to kind of individually select a combination of low living expenses and high earnings, place to find employment.
Well, Reddit is doing something that is a bit of a gamble, right? They're basically calling it and saying, hey, we believe we can find talent either you're fine with a normalized cost of living while you're living in the Bay Area, or you're willing to move out of the Bay Area to, on your own to kind of figure out that formula on how to maximize your lifestyle with what we're going to pay you. But they're kind of, I mean, I guess the other side of that gamble from my perspective is as they go forward, they are basically saying, and if you don't like it, we think we can find people outside of the Bay Area that are talented and able to do what we need them to do. And, and that's, I think, I believe that's probably true, but I think the tech world probably is a little bit scared to do that, that there's probably a sensibility within the tech bubble in the Silicon Valley area, in the Bay Area, that, oh, there's this concentration of talent here that you can't find other places. And so for Reddit to make that move, be one of the first to kind of make that move, I mean, it takes, I guess I'd say it takes some courage of a certain sort to try that when before the rest of the market has tried that.
What I thought was interesting that the article didn't mention was kind of the fact, what about the people that are already working in San Francisco and we're getting like a cost of living wage? Are they going to take that away from them, or is it just a go forward kind of thing? So I don't know the answer to that, but I thought that was probably an interesting point that the article didn't address from my accounting perspective, or at least like a financial perspective. Like, what happens to the people that already have it? So you got one for us, Spark?
Yeah, I found an interesting one in Accounting Today that kind of deals with some of the accountants that might be listening to us. Employers refilling open accounting jobs amid pandemic. So about 70% of employers have done some sort of furloughing or laying off of employees during the pandemic. And a lot of them are coming back, which I'll talk about a little in another article later. But the interesting aspect of this article I found was that a lot of accountants are going to start backfilling open positions, meaning that accountants might be doing some receptionist work or customer service work or cleaning the bathrooms. Who knows? I mean, it's just an open field, but as accountants seem to be required in specific industries, and they are the ones who are there, as some of these other people have gotten furloughed, some of the jobs still need to get done. And it seems that this backfilling trend of accountants, and at least until the business world opens up wide again, accountants seem to be taking on all the odd jobs that are around. And what are your thoughts on that?
Yeah, so I mean, it seems like one of those things that I never realized before getting into accounting that so many other departments and so many other types of jobs would fall back on the accounting department. But it's definitely a theme that I've seen in a lot of places. And it seems like, I think just the accounting field having a high degree of involvement in the business leads to where people and operators of the business feel that they can comfortably go to that person, even when the issue is maybe not related to what they would normally do. And so I think just so often things get, the default of like, if somebody else isn't here to do this task, who's going to do it? It's the accountant, unless we've got somebody else who's already tasked with that. And so yeah, I'm curious if AJ, have you had that same kind of experience where kind of everything falls back to the accounting department, or have you seen that?
I mean, I have seen it. I worked as a kind of outsourced accounting person in a role that, like they did a little bit of shipping and receiving, they did inventory management, they did ordering, they did contract, negotiation in a way, they did, all the miscellaneous things. But the reason that it was done at the companies that I've seen was because of a lack of size, I guess, for lack of a better word. There wasn't enough accounting, bookkeeping, even CFO work to go around to fill 40 hours. So if they're paying you to be there for 40 hours, guess what? You're going to do something else that needs to be done, kind of situation. So I think you see it more in like startups and such like that, where you get involved in other things. I'm just wondering, like a motivating factor for me at a job is usually upward mobility or doing something that I enjoy. So I guess motivation in a situation like this, if you're an accountant doing, like secretarial work, it may be fun and breezy for like the first week, but you're suited for better things, I guess, or your knowledge base and your skill set is geared towards something else that's probably more productive with your time. And I would find it vastly demotivating, probably after the first week of being like a receptionist or a limited role somewhere where it wasn't using all of my experience and expertise. So it's something, I guess if we have listeners that are in that space, I would just say hang on and continue looking, but I understand the need from a business perspective that if there's things that you need to fill, there's somebody that has hours to do so, you can plug them in there.
Yeah, I think we've certainly seen this a lot with kind of small businesses. And I think for the same reasons that AJ said, and also because a lot of times in small businesses, the operators don't actually know what accounting is. And so what you often find is that anything that is paperwork related or has a form associated with it, or maybe even something that is legal related, all of that to kind of the less experienced operators to sounds like accounting. And so it all kind of floats that way. And there is no other clerical support in the company. And so anything that requires kind of putting a spreadsheet together or putting together a memo or, is paperwork of any kind, it's not uncommon for all of that to just land in the accounting department in a business where everybody else operational is not like in front of a computer or, doing something or in a situation where they would where they have the capacity or the tools or the skills to do any of those things. And so, I think, Mark kind of tongue in cheek said, the accountants could be doing anything, including cleaning the bathrooms, and maybe so. But what I see very often is the more nuanced scenario where it's paperwork. It's not really something completely unrelated to accounting, but a sophisticated operation would know that paperwork is legal related, or it is HR related, or it's just a form that an operations manager could be filling out and doesn't require an accountant to fill out. And yet it all kind of goes back to accounting. So that's what I see happen. And what I would suggest to most operators, and I think it depends, like this issue of should the accountants be doing things outside of accounting or not. I think I've advised both directions, right? Like if the organization is not complex enough, like if the accounting process in an organization is not super complex, then we have very much advised that, why don't you have the person who is an office manager or a receptionist or an operations director or somebody who is basically capable of doing various office tasks where accounting is not very complex and it's not critical to have an experienced accounting background to complete the daily accounting tasks. Perhaps it does make sense to have that person who is doing a lot of other things handle the small amount of accounting there is, or to handle the level of accounting there is to do, because it doesn't require a lot of accounting experience to do it. And so I think that does happen with certain organizations very often. And I think that we're always looking out to advise that if needed. But then on the flip side, you can see it the other way too, but that's if the organization is not very complex from an accounting standpoint. There are many organizations that actually are complex from an accounting standpoint. And then they're either doing one of two things. They're trying to stretch an office manager to do an accounting role that's too complex for them because it requires more accounting experience. But I think more often what happens is the operator at some level kind of realizes that accounting can't get done without somebody with accounting experience. But then going back to what AJ said is they also know they don't have 40 hours for an accountant to do. So they hire an accountant and then they try to draft the accountant into doing other non-accounting things, right? And I would suggest to the operators, and in a very self-serving way, because this is kind of where a business like ours comes in, is that in those cases where you've got enough complex accounting that you actually need experienced accountants, but it's not a full-time role, rather than trying to stretch one person across multiple roles like that, bring in a firm like ours that can handle the fractional amount of complex accounting that you have, rather than trying to hire somebody at our rates and then ask them to do things that don't require our rates to do, kind of thing, right? So, I mean, that's my 2 cents on the subject, and also bringing it back to a self-serving plug as well while I'm at it.
I think that's very true. And yeah, I agree. It's one of those things where it's just like, you wouldn't bring on a mechanic and ask them to do 40 other things. You'd respect their time and you buy it in the lot that you need and when it's needed. So yeah. All right, so I've got another article from CNBC we can talk about called SpaceX prices Starlink satellite internet service at $99 a month, according to email. And so what's happened is that Elon Musk's company SpaceX is trying to launch satellites into the ether and get everybody internet. And so basically there's about 900 of them up there so far. And they had a program where you could basically sign up to get a kit where they would send you a router and all this good stuff. And one of the things I thought was interesting about it is that they know that this is not a mainstream answer to internet just yet. And so they've named it in a very kind of kind of an interesting way. They've decided to name it the Better Than Nothing beta test. And I thought it was interesting just because it's like a good example of just managed expectations through your branding, really. Like, setting it up so that when people sign up for this service, they kind of know what they're getting themselves into and that maybe it won't be the fastest thing. And so I want to talk to you guys a little bit if you can think of any other examples of businesses who really just want to set the tone up for the customer and name it in a way like that.
Yeah, actually, the first example I could think of was I don't know if you guys have heard of this, but there's a restaurant in Phoenix called the Heart Attack Grill. And that's exactly what they serve up is heart attacks on a plate. So you're talking about like really fatty burgers, milkshakes, made with ice cream and cream and half. And they have, I don't know if it's still true. This was a controversy back in like the early 2000s. When I lived in Arizona, was the guy got sued because a lot of people were having actual heart attacks from eating at the restaurant so often. And so, and he stood his ground. He won these cases because essentially he said it was, open and fair marketing that the name of the place is Heart Attack Grill. And if you eat here too much, that's exactly what's going to happen if you are not watching your calorie intake or whatever it may be. So, yeah, I think with respect to the satellite internet too, anybody that lives in a rural area knows their options are limited. And I'm not so sure $99 a month isn't a good deal. To be honest, I've looked at satellite internet before, and I think this is years ago, but I think back when I looked into it, it could be upwards of $350 a month for, 15 megabytes a second or something like that. So it's not, doesn't seem out of the realm that he might actually have something here. And I do think the name is clever and funny too.
Yeah, I don't know that I can think of any company names, but I do really appreciate the branding. I know the speeds on this thing are going to be like between 50 and 150 megs. And one of the things they said was expect drops in service at any given time. So this is not kind of for somebody who's running their business from home and needs to be connected all the time because it's like, oops, I'm in the middle of this Zoom call or whatever. And now I'm out of internet for 3 hours. The other thing that I couldn't help thinking of, it's like 900 satellites up there and they need thousands more in order to make this successful. And I'm like, has nobody watched the movie Gravity with Sandra Bullock? How much space junk are we going to have up there with everybody, with all these just random satellites? And, I'm old enough to remember Skylab, but that ages me a bit.
I thought that movie was just called Sandra Bullock Breathing because that's the only takeaway that I had from that movie was just the sound of Sandra Bullock breathing in my ear. But
I actually did hear a podcast where astrophysicist and scientist or whatever, Neil deGrasse Tyson, was talking about space junk. And he says it's not too far out before there'll be so much junk up there, satellites and everything else, that you won't be able to launch rockets out of Earth's orbit because they'll run into something. So I guess it's a real possibility. All for internet. Also, we can have Twitter and YouTube,
Well, and just wait till all these different internet service providers start launching satellites into each other's satellites. Like, what's going to happen? Who knows? We'll see. But all right, AJ, you got another article we can talk about?
I do. No Skynet for us, but here we go. This one's from Accounting Today too. Mark and I must use the same news feed. But this one's growth drivers for accounting firms in post-pandemic era. So this one's interesting, and I think probably we'll all have something to say about this. But this is essentially laying out how accounting firms can set themselves up for a post-pandemic era. And the quote that I thought was funny, well, I'll walk through how she thinks you're going to get there. But I think 4 key aspects where technology will play a role in defining the future of accounting are future-proofing, recalibration, productivity, and trust. So future-proofing, reimagining the business model, where she talks about using big data to data-driven insights to generate more business, delight customers, and be better equipped to create new futuristic services. The next one would be redefining business focus and operating models. So they have right now she's saying that they have an opportunity to recalibrate and consolidate many business processes without compromising on agility. Centralized IT function can steer the business to the right technology foundation and building blocks. So she's again roping back into this technology leap that accounting firms need to take. Productivity, enable process and tools with employee first thinking. So in the post-COVID-19 world, employee productivity will be impacted by 3 key aspects: will-driven well-being, remote readiness, and reskilling. And then the last one is, the last 2, trust. So institutionalized practices to demonstrate in the marketplace. So an intense focus on audit quality and accuracy due to the alarming growth of fraud. We actually have an article that will talk about this a little bit later. And then embracing digital. The post-COVID-19 future of accounting will need to gear up for a long period of uncertainty and change by building reliance in systems and people to withstand current and future shocks. So I'd like to get your guys' take. Do you think she's nailed it on the head here, or do you think maybe she might be thinking big here?
I'm kind of seeing a trend in some of these articles that we've been covering the last few weeks, in kind of this future thinking of the accounting profession, and how now that we're kind of mid-pandemic, if you will, hopefully past the middle, but who knows, it's kind of, we have to function in a technologically advanced world, and anything coming in the future of accounting seems to be geared toward the flexibility and the ability to work from home. And a black swan event like the pandemic that came down upon us, we have no idea when the next black swan event is going to happen, and they seem to happen closer and closer together. All these 100-year events that seem to, I've had quite a few in my lifetime, and not that old. So I think if we get in a place where we can future proof and we can start, some of these ideas about getting employee centric, et cetera, business models are always going to change. So reimagining business models for what the current existence looks like certainly will help, but then we're probably going to have to reimagine it once everything is open again.
Yeah, it's one of those things where, because accounting has to integrate with all the other departments, as soon as any other department starts using these kinds of automated tools to generate either more sales or more work or whatever it ends up being that we end up having to, keep up pace with how those are working. And so I think it's always going to be true that accounting is going to always have to be evolving to keep up with the pace of what the other departments' outputs are. And those seem to be things that are, as CRM becomes more popular and as more tools are enabling people to do their jobs better that have nothing to do with accounting, it just in turn makes more work for accountants. So I think, that's going to be a theme we'll be seeing for a long time to come. And I just want to say, I think the author hit it on the head for a lot of the other points as well. That was a pretty good, representation of how to keep up to date.
Yeah, and I think we're fortunately in a good position. When you're consulting for multiple small businesses, you have the opportunity to see what they're all, kind of how they're all doing things, how they're making changes, how they're innovating with technology, I'm thankful for that. I was reminded of that point. I think yesterday I was sitting in on a university advisory committee, and the question came up about, what kinds of things can we do to prepare our students for kind of the future workplace, or for the workplace in this kind of new kind of mobile world or remote world that people are working in. And I didn't really think of anything smart to say until I heard somebody else talking about how important being able to use kind of the video conferencing tools like Zoom or whatever your favorite tool would be. We use Zoom, but that's not the only tool, of course. And as they were talking about that, I'm like, oh, we're talking some real basics here. Of course, yeah. I mean, I think university programs probably don't realize the extent to which, for example, small businesses use instant messaging programs like Slack or Microsoft Teams to coordinate on a daily basis, and I think there was some talk in the group about, how do you really stay in touch with people and feel like you're working side by side with them when you're no longer side by side. And to me, the answer, because we work with a lot of clients, and like almost every client we work with uses Slack or something like that. So it was like, this just seemed obvious, but it wasn't obvious to everybody in that setting. And so it was like, oh yeah, I guess that is an advantage to the fact that we work with a lot of small businesses. We happen to work with a lot of tech-oriented small businesses. And so we see kind of the same solutions being used, and we see them being used in good ways and bad ways, and so we can kind of develop thought processes on that. So yeah,
the only disagreement maybe I have with the article is the fact of use of big data is going to save you. A lot of our clients don't have big, a lot of clients period or small businesses don't have quote unquote big data to pull from, unless you're talking about a complete industry set, which many people don't have access to or is very expensive to get. So, I mean, automation and, remote working and all that can make you very efficient, but I don't think I think you have to look elsewhere also for efficiencies and to be able to deliver on service, not just rely on being able to have a remote system or remote, capture of data or anything like that. So.
Yeah, I think that's exactly right. I've railed in this program before about these articles and things that always want to throw big data in there as some kind of thing, right? Without any kind of example of how it would be a thing, right? It's like, I'm still trying to stay open-minded and realize, yeah, there's something here that they keep thinking that I'm just not thinking of, right? But I agree with you, AJ. It's like, as a practical point, yeah, there's not really a big data application in that way. For the most small businesses. And I heard somebody from a large international accounting firm, a director from that firm, the other day was making a point about people talking about big data, and his point was, for those of us who actually do work with big data, because we work with huge data sets with large companies, like if you're auditing big, worldwide Fortune 500 companies kind of thing, we've been doing it for a long time. It actually isn't anything new. so yeah, I don't, it's kind of an interesting, yeah, that it's just one of those buzzwords that people throw out there without any real context, or I think really understanding how that actually would be meaningful.
All right, Mark, you got another one for us?
You bet. So from Market Watch, I don't claim to be an economist, but I thought it was interesting that this week the GDP numbers came out and we saw a record 33.1% growth in the third quarter. But, when you compare that to the previous two quarters where we had 31% down and then somewhere like 5 or 6% down in the first quarter, this whipsawing of the economy seems to be an interesting playground that we accountants have to kind of wade our way through, because obviously politicians are going to cherry pick numbers and use them to their best benefit to claim one side or the other. But from an accountant's point of view, we have to try to predict and analyze budget-wise what's going to happen in future quarters and future years. And these anomalies in the economy make it really difficult to know when things are going to get better. If we have a resurgence in the winter, is the fourth quarter going to be down again? We just don't know. And overall, we're a little bit down for the year, but the fourth quarter is still to be written. So it makes it tricky for us to kind of play the traditional role we have. And I think it kind of goes back to some of the articles we've been talking about flexibility and modeling and just kind of figuring it out as we go, because I don't think anybody's going to have the magic 8-ball as to, or maybe the magic 8-ball answer is outlook is not clear. What do you guys think?
Yeah, I mean, I think you hit the nail on the head. I mean, I think it's key to understand, like when you're looking at metrics, like really put it into perspective. So growth is a relative term, relative to what? The last period. Well, if the last period was an anomaly that is never going to really happen again, or wasn't really representative of what had been happening up until that point, it's hard to then use that growth rate as anything predictive in the future. And so I think it's just one of those things where in order to really make use of it, there has to be a broader, more deep look at how to, how to really forecast in times of turbulence. And I don't think I have that answer, but I can just look at it and kind of know that, I've seen it in financials as you look at, because in an individual company, you often see this happen where one month is an anomaly and you're doing percentages and you just see that the next month, doesn't behave as you would have believed. And so it was one of those learning things of just like seeing it happen a few times to realize you can't trust just that on its own. But yeah, it's at the whole economy level, you wouldn't normally think that that there would be that kind of variation without, such a crazy event. What do you think, AJ?
Well, I think a lot of this probably is still yet to be written, right? We're kind of riding into Q4 here. And at least, our market is based on people buying stuff. And when do people buy stuff? Usually in Q4. I mean, for retail businesses and goods, you're talking about a Q4 that needs to be strong for you to have a strong year. They don't call it Black Friday for nothing. That's usually when retail companies go into the black. It's usually they're operating in the red before that, was the old saying. But I think realistically, probably the barometer on this will probably be fourth quarter, like it usually always is. But I think even more so this year, probably people are going to be very close watching how November and December do, how October rounds out. I think to make any stakes on what it is going to be going forward, or if we can, whether the market's going to slug down or if it's going to chug forward.
Yeah, I think I guess in my own mind, I feel like there's a little bit of, for me, I feel like there's a cognitive dissonance with kind of seeing good news like this, but not feeling like that reflects like what I see on the street and, and what I see in small businesses that still, like restaurants and things that still have to operate on a limited basis. And so it reminds me of something that Ray Dalio said, and he's that kind of hedge fund investor guy who a lot of people look to for various kinds of business and economic advice. And I think he's done more than one in recently, but early on in the pandemic, I mean, I think back in the springtime, he was doing a TED talk or an interview of something of that nature, and people were asking him, did he think that what we were about to go through was going to be a big depression or an economic collapse? And his answer was no, that but what we had to expect is a reordering of the economy, that we were going to see as an economic reordering. And I feel like maybe that's kind of what we're seeing play out. Like when we see these good numbers, but yet some of the traditional things that we might think of just around our own neighborhoods don't really seem to be back yet. It makes me think, okay, well, it's because things have shifted around. Like the good numbers are coming from a different sector that is really overperforming, but there's other sectors that are still not performing well. And that's kind of this reordering of the economy in some way, which, at the end of the day, a net increase in the economy that has been significantly reordered still has a lot of pain for people involved in it, right? Because there's people getting left behind in that reordering process, or people who haven't caught up to the new way of things in that reordering process. So I don't know. I said this on LinkedIn the other day. I had like a meme or a statement by my face with just kind of what I thought was a funny statement that, I think social media, or I think Social Security is living paycheck to paycheck like the rest of us. I said something like that. And somebody, astutely spitted back, well, do you have any data to support that, or something like that? And I said, no, I don't have any data to support that. And it reminded me of something Bill Maher always said. I say it about this reordering concept that I'm putting forward here. I don't have any data to support it, but Bill Maher does this funny bit where he says, there's so many people in this country, a lot of us, that we say these things and we say, I don't know that it's true. I just think it is, right? I don't know that it's true. I just want to believe it is, right? So I'd say that about this. It's like, yeah, I don't know. It's a theory. Or is the economy reordering itself right now? It's a theory. I don't know that it's true. I just kind of think it is.
We have the consumer, what is the confidence rating? Now we have the Thai car confidence rating on the
Yes.
economy, like, you got another article for us, Charlie?
Yeah, I do. All right. So I've got an article in from Pocket, which is not a source I've used often, but I thought it was an interesting topic. It's called When Employers Demand a Salary Range from Applicants but Refuse to Suggest One. And so the article is focused in on this problem of like people who make job postings, but then they don't want to post the salary. And then people want to apply to the job and they want to be direct and figure out what, the whole point of working is to get money. And so people want to know what they're getting themselves into. But there are a lot of recruiters who will, or even just companies hiring, who balk at the idea of being upfront and direct about how much you want to make. And so I thought it's one of those interesting kind of conundrums where, it seems so obvious that you would make it to where jobs should just be posted with a salary range as the rule. But it's so often the exception. And so I want to get your guys' take on kind of why you think this happens and whether or not you think that jobs should be required to post salary ranges before they go looking for applicants, or if that's, if that's taboo.
Well, I think it depends. It comes down to who's doing the shopping, right? Is it that's essentially what this argument comes down to is, okay, are employers shopping candidates and wanting to see the price tag beside each candidate as they shop, or candidates shopping companies and wanting to see the price tag as they shop, or is it both, right? And I think that's the game that's being played. But yeah, it was interesting to me because I was just thinking the other day about the fact that kind of being the outside consultant, we always go into somebody who employs us with a proposed fee. So we propose to them, here's what we're going to do for you, and here's what we're going to charge you. And they accept it, or they say, oh, well, I found somebody who I think does a better job, and we're going to use them. Maybe they're a lower cost or whatever. Or, they might come back to the table and say, well, maybe we don't need you to do all those things. So can you give us a lower fee or whatever? But we always come to the table. We, as service providers in that way, we always come to the table with a proposal and a fee. And I was thinking the other day how, yeah, that makes us different. That's one of the ways we're different than employees who kind of go to do an interview and then they wait to see what the offer is from the employer. So when I saw this article, I was like, oh, well, maybe we aren't that different. Maybe essentially that is what's happening to a lot of employees too, is that they're having to go into the interview with their proposal. I will do the CFO job, or I'll do the controller job, or the accounting manager job, and here's what I'll charge you to do it. What do you think? Is that how people are getting employed these days? I guess I've been out of the regular employment market long enough that I don't know, because I'm always just proposing my fee anyway.
I would say as probably the person who has been in the job market most recently, I could very much relate to this article. And I think Ty brings up some great points. And I understand from an employer's point of view, not wanting to land on a specific number, and having a range sometimes that can be a little more flexible based on what you're bringing to the table. And, given your experience, every accountant, and that's the only experience I can currently speak to, has a different range of experiences. So they can go into an interview and say, well, you might not exactly be looking for this, but I could bring this to the table as well, which then becomes a value add for the client or for your employer. But one of the suggestions that the article makes that I really liked was to go through recruiters. And there are certain industries where that works very well. I think accounting is one of them, because recruiters know exactly what the pulse of the market is. I had a couple of recruiters tell me, yeah, this should be your range for the level of experience you have and the number of years you have. And, don't sell yourself short, because that's another fear that employees get into. They lowball it, and then the employer jumps at that chance. And then, wow, you're hired, but, you're getting the bare minimum you wanted to make just so you could land a job. And then, the employer thinks, wow, I got a bargain. I was willing to pay 20 grand more than this. So connecting with professionals and using the professional environment. I mean, obviously there are sites out there like Glassdoor and, you know, other places where you can figure out what industry range based on your experience you can make. But I think using a recruiter or somebody who has the current pulse of the market and they know whether it's an employer's market or an employee's market. I mean, it almost felt like buying a home. You know, it's like, what am I going to do here? You know, and present yourself. And if they say, well, we're not willing to pay that, then value yourself and move on if you can.
I think you hit the nail on the head there, Mark. I think, you know, educating yourself as to what to expect, at least from your position and experience, you know, what that will bring you, I think is a powerful negotiating tool, as well as like just a heads up that, you know, maybe somebody that's offering well below that isn't going to value what you're bringing to the table. So I think educate, and it also depends on where you are and what job industry you're in. I mean, if you're a mechanic looking for another mechanic job, or you know, a janitor or something like that, then maybe your options and you know, educating yourself about the salary is less to do with that than to finding a good employer. But I think if you're in a professional field or like a white collar job, there's probably plenty of salary data out there that you can pull from, either whether it be a salary guide from your industry or LinkedIn or, you know, Glassdoor or anything like that, where you can kind of get an idea of what the ballpark is. And I think that would give you a better idea of, you know, and a job interview and a salary negotiation is a two-way street. You know, I think people often think of like, you know, they show up, they're going to be given a number and then, you know, okay, I accept the job at this amount. But I think that's, you know, it's all open for negotiation before you sign an employment contract or get hired. So I think arming yourself with as much data and backup as you can before you go in there is going to serve everybody the best, you know, employer and employee.
I think that seems totally true. And the only kind of like caveat I could think to this was that I wish I had a source to kind of back up what I'm saying here, but I had read somewhere that one of the kind of early abuses of employment back before there were like labor unions and that sort of thing was like reverse job auctioning of the rate. And so they would like get a room of people together and they would say, I've got a job, who will do it for 10? Who will do it for 9? Who will do it for this? And then they would kind of use that as a tool to weed out kind of who's, you know, to basically abusively fill the role. And so I know that's normal in a lot of different industries, like in government contracts. I know that's normal to kind of go to the lowest bidder, but I think it can also be used in this thing where it's like, it seems like information, everybody should have the available information, but at the same time, you can kind of imagine that becoming an abusive tool. And so it's just interesting to think about where that balance really lies.
Yeah, one further thing I would like to add is, you know, in the US, I believe women get paid 72 cents on the dollar for what a man gets. And I don't know, I'm not going to make a blanket statement that women don't negotiate for themselves as well, but I think there's a tool to negotiating, to knowing your value, to knowing your worth, to knowing what a job pays, and then sticking to that, you know, whatever the field is, because I think, you know, there is a level of negotiation to be had, but it's a skill and it's an art form, and I think it's something that's worth trying out and not just accepting the first thing that's offered up.
This one I think we probably needed a little bit of prep on, just because it's kind of heady. So this was is audit fit for purpose, and it's written by a UK. It's based around UK, and it's in response to the Wirecard collapse. And so what happened was a famous short seller, David Innenhorp, hit out at auditors after the Wirecard collapse, saying that they failed to discover fraud that was hiding in plain sight. And the explanation given below, it's kind of hard to, you know, fault him for saying that. So the German fund group, which had been investigated by Financial Times for years, filed for insolvency for admitting that 1.9 billion of its money in all probably didn't exist. It probably didn't exist. And then the Wirecard's auditor had signed off on the monetary accounts for greater than a decade. The article goes into great detail, kind of critiquing the audit profession itself. And kind of, I'll break down simplistically what they're saying. although the fraud itself, not locating the fraud itself is alarming, shareholders additionally checklist an array of different issues with the audit and accounting trade. So long-running considerations embrace the dominance of big four, there not being that many competitors out there. Potential conflicts of curiosity when auditors additionally do non-audit work. And then size of tenure, with some companies auditing firm accounts for 10 or 20 years. Based on, there's no rules about rotating auditors in and out. Then somebody else kind of says that with the Carlton, which was another collapse of a company, it collapsed regardless of apparently following all the right rules. And she's saying that essentially the audit or the financial disclosures and rules need to be more stringent to allow people to see that a company was failing, like the Carlton case, that essentially they made all the right disclosures and had all the correct, financial statement pieces in there to pass their audit and to have their it filed correctly, but in fact they failed again. So I'd like to get your guys' take, because I have a take. I'm biased myself, as I used to work for an auditor. I think they have some legitimate gripes here, but I'd like to hear what you guys think, if maybe the audit kind of function of public accounting firms need an overhaul, listed with the way that, the main critiques of the article there.
I mean, I think it's on some extent, it's up to the reader to understand the kind of limitations of financial statements. I mean, for the non-accountant out there, there's this idea called the going concern, where we're going to talk about whether or not this business is going to continue into operations into the next period. And it's like, that's not a guarantee that the company is going to do well, or even that it is going to exist through that period. It's just an impression of whether or not it seems from the financials that will be the case. So I think it's important that those who read the financials understand, what those limitations are and what is a reasonable expectation to be able to take away from that document, because it's not always what you might think or what sounds reasonable at first glance. What do you think, Mark?
I fully agree with you, Charlie. And I think part of the problem is that the expectation of what an audit does do and what it doesn't do is pretty skewed. I have come across a number of companies where they get a financial audit, and an accountant who might not even understand the audit function says, well, it's got to be right, the books have been audited, or something to that level, where it's like, an auditor is in there to try to come across material misrepresentations, and something might not be material, but it might still not be done in what would be known as best practices, or things can slip by. So I don't necessarily think that laying the blame on an auditor, or expecting that because a company is audited that their financials are perfect, is an expectation that the layperson should have.
I couldn't agree more, Mark. I think people's understanding of what an audit does is often skewed. They often see an audit as like a fraud prevention technique. And although audits do, they get an impression of your internal controls and your control environment, and then they provide you some level of assurance, either through a review or through an audit of the materiality of the financial statements, the materiality correctness of your financial statements. They definitely do not detect frauds. I think, it's been documented that only 5% or something of frauds get uncovered in an audit. That's not what it's there for. It's to present an opinion on a set of financial statements and financial records for a set amount of time. And it's not necessarily a fraud detection tool. And so I think, in speaking of this one, I think, speaking frankly about the EY thing where they were missing apparently 1.9 billion in cash. I mean, that's one thing you do confirm, and you do need to put eyes on, is how much cash somebody has. It's pretty bad if they're missing cash and they said it was there. But I don't think that, as a whole, I think there is a large misconception with the general public and even operators and even accountants sometimes as to what an audit provides a company.
Well, I think that is kind of the overall nature of the problem, right? Is that if an audit doesn't provide what the public or what operators, or even in some cases what the board might think it should, then, you know, then what's the point of it, right? Because on the flip side of that, audits are relatively expensive, so there is work being done. So there, I mean, the catch of this whole thing is, you know, as accountants and auditors, we could be doing a whole bunch of work, and we're charging fees for it, so we're spending money and time and energy. It doesn't actually provide something that people would understand or be meaningful to them. And so what are we doing it for, right? I think that becomes the question. Is there actually any value to the audit the way it is currently structured? Is it not, you know, it's kind of like sometimes there are things in life where you either do it or you go all in, but going halfway is of no particular value. And I think that becomes the question with audits: is that becoming the problem here? Is that in some, you know, in some circumstances and in some sectors, is an audit really kind of like a halfway compromise solution that doesn't provide real value because you didn't go far enough with it? And because you don't go far enough with it, maybe you shouldn't have incurred the cost of doing it at all.
Well, in the audit, I think so. I think like 5 to 6 years ago, one of the big points of contention were 401k audits. If you would go to like any of these CPE courses, there was a report that was done that a majority of 40, there was a number that was presented that suggested that a lot of 401k audits done, especially by smaller firms where they do 1 or 2 401k audits a year, were wrong, and there was findings in those audits that were not unveiled. The big majority of dollars covered under the audits were correct, but it was usually for small 401ks that were audited by small firms, and it's a very specialized type of audit. But then the reason I bring it up is because the reaction to this finding by a self-survey was to crack down then on the providers of those audits and to have more stringent rules behind it. And I think that's the compromise we're going to see here, is probably a crackdown and probably more enforcement on like peer reviewing, being able to provide, you know, assurance at a rate that will satisfy, at least, you know, meet business and the accounting profession itself halfway, I think. And that's probably what you're going to see is a give and take on this issue, where they're probably going to require additional testing or some kind of peer review or more in, you know, second partner review in firms as a compromise on this. But I don't see it as going as like ultimate insurance or complete assurance in an audit, and you're going to cover, there is no materiality. That's the other thing it might do, is they might adjust materiality limits and push those down to a smaller dollar amount.
Yeah, I think the nuance, I think part of what you're getting, what you're kind of dancing around there and what you're talking about is that an accounting failure by the company doesn't necessarily imply an audit failure. And on the flip side, you can have an audit failure, but the accounting is more or less materially correct. So the two things can be disconnected in that way. And whether the audit was what we'd consider from audit standards to have an audit failure or not is a very like inside baseball accounting thing, you know, that is hard for the public or, you know, operators to fully grasp, I think. So yeah. But I guess we can be assured some lawyers will be grasping it.
for 15 minutes a pop, right? You know?
All right. My last article is kind of a fun one because I'm a big fan of Microsoft Excel. And Microsoft Excel, in their kind of try it out program, is started to overhaul Excel with live custom data types. So I don't know if any of you guys are familiar with Wolfram Alpha, but they're kind of this data hub that can source all sorts of different information, all sorts of weird, wonky information. And they're kind of partnering with Excel to bring in some of these custom data types. So I think we've already had live stock feeds that you could get through Excel, but now they're introducing over 100 other types of data points that you can bring in that can update live based on the Wolfram Alpha engine. Some of these might be like nutrition information if you're a dietitian creating a diet plan, or the periodic table, which I don't think changes that often, but still, you could have each element be in a box, that you can refer to as an Excel cell instead of having to, dig down into a specific periodic table. So, they're going to be using the Power Business Inquiry Service and other tools that you can start using these live data. And I listened to your podcast the other week when England totally screwed up their COVID numbers because of an Excel error, and I was like, well, maybe if they had this tool, they could be up to date and using current numbers. So I was curious what you guys thought about that.
Yeah, I mean, I think it's a big improvement. I mean, I don't know if it's been improved since I last remembered it, but the way to get stuff into there was a very complicated way to try to get stock quotes into Excel a long time ago, and I'm glad to see them expanding past that, because I remember watching a YouTube video on it and thinking to myself, like, there's just no way that people, unless you're already a programmer, you're not going to go through the steps to do this. And then I recall that Google Sheets had a couple of these type of features that before Excel had them kind of mainstream. And so it seemed to be kind of setting the groundwork for how things might go. But yeah, I think it's a great thing. And the more we can get things like population or whatever type of data that we would use, and that everybody, goes to the same data source to get, I think that just seems like a good idea.
I think it's a win. Finally, Excel is released to the masses. The examples they gave here are non-accountant related, and I think if back in the day when you would download the Microsoft Office suite, Excel was relegated to the accountants, and then PowerPoint and Word was used by everybody. But maybe this is the breakthrough that Excel needs to make it to the masses, that you can have the periodic table or a live stock quote. We're finally out of the basement, boys. I think we've made it. I think it's to the masses. Excel is here. All right, that does it for the show this week. If you liked it, go ahead and smash the like button. And everybody have a happy Halloween from everyone here at None of Our Businesses podcast.
Thanks, everybody.
Thanks, everybody.
Thanks.
Get a couple more woo-woos from AJ.
Another spooky episode of the None of Our Businesses podcast. Woo! That's it from the None of Our Businesses podcast.
Nice.
This episode was quite a scream. Can you still hear me all right with this thing?